Welcome to another video. Today we will be speaking about multi-timeframe analysis, order flow, and how you're supposed to be approaching your analysis when you're looking at the market. So we will be taking a pair, I will be analyzing it, and I will put in the analysis some free educational lessons, as well as obviously showing you how you're supposed to be analyzing the pair. So the video will be very valuable and I suggest you watch it until the end. Now, if you're new to the channel, I'm a top author on the TradingView platform, as well as running an educational program and swing trading full-time with my students. Okay, so let's make a multi-timeframe analysis of Euro AUD and see what we can expect from this pair and how we can be capitalizing on the next possible moves on it. And I will try to keep the analysis as educational as possible so that you guys can get the most value out of the analysis. So let's start from the monthly time frame. What kind of situation do we actually have on this time frame? Now, if we want information on all of this retracement move from a monthly perspective, huge moves in the market, what are you supposed to be doing? Taking your Fibonacci from the high to the low of this impulse. And what you can see that the market went all the way up to test the 0.786 Fibonacci retracement level, and then the market rejected it all the way down to the downside, broke below the 61.8, and what we can expect? We can expect the market to go and test the 50% retracement from a monthly perspective. Why? Because we can clearly see that this is a very strong level in the market. It was acting as resistance here, again resistance here, again resistance here, and all that resistance is now turned support. So it's a very strong demand area that market makers might want to go and test to grab some liquidity. So from a monthly perspective, we identified a possible downside target. Let's put a horizontal ray on it just to mark it up, keep charts clean, and let's go down from a weekly perspective to see what kind of situation we have. Let me make this visible on all time frames. Perfect. Let's go down on the weekly and see what kind of situation we have. Now on the weekly time frame, what we can see that the market basically created this very nice move to the downside, going to retest which level? Going to retest this clear previous resistance here, now turned support at this level, which is above the already strong support that we had identified from a monthly perspective, right? So we have this support here from a weekly perspective, clearly the previous structure. In fact, it was acting as resistance here and is now acting as support here, but this level is above the level that we had identified from a monthly perspective. So we have our weekly support and our monthly support. Very clean chart. We know exactly what we're looking at. Let's go and see what we have from a daily perspective before going and seeing basically what we have from a COT perspective. So what hedge funds are doing on the euro and on the AUD. So let's start first by going on the daily time frame and complete our directional analysis from a price action perspective, because always remember, monthly, weekly, and daily time frame are for direction in the markets. The 4-hour is the time frame in which you're supposed to be looking for possible entries. But since now we're speaking about direction, let's complete the directional analysis with the daily time frame. Now, if you remember, I published an analysis on TradingView basically a weeks ago, speaking about why from here we wanted to see the market make this move to the upside. Why did we want to see this move to the upside? For three main reasons. I will be speaking about two of them here because that is basically what we had from a price action perspective, and then obviously there is the COT reasons, so what hedge funds were doing. Now from a price action perspective, why did we want to see this move to the upside, and why did I say it on the TradingView analysis? Because we clearly had this overextended M formation. After an overextended M formation, we want to see the market make a move to the downside, to the upside, and complete the pattern at the neckline. So from a daily perspective, it was clear that we wanted to see the market make a move to the upside, and we had confirmation of the intention of the market to actually possibly make this move to the upside, because from a weekly perspective, as you know, we had the support here. So what does it mean? It means that from a daily perspective, we had an information that was lining up perfectly with the weekly support. So overextended information on daily lining up with a weekly support, we clearly expected a move to the upside. And I will link that analysis in the description. Now, going back to what we have from a daily perspective at the moment. Now, what we can see is that clearly we have support at this area, and we have the possibility to create this double bottom. But at the same time, we have to realize that we do have some resistance exactly here. Why exactly here? This was the previous daily support, now turned resistance, and until the market will remain below the structure, as you can see with this green candle, the market created the structure support, which is now structure resistance. Until the market will remain below this area, it will be resistance. So we will be basically in a bearish market. And as we said, we have the weekly support here, which we expect the market to go and test. So I will now show you how we can basically be looking at the market, knowing now all these things. But first, let's go and see what we have from a COT perspective. So what hedge funds are doing on these currencies. Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to cover in the next videos. Okay, so if we go and see what we have from a COT perspective. So what hedge funds are doing at the moment on AUD and what they're doing at the moment on the euro. Let's start from the AUD. Now, immediately we can realize that AUD is actually a commodity currency, so it should get weaker in periods like this from a fundamental perspective. So we already know that from a fundamental perspective, we can expect some weakness in the AUD, which lines up pretty nicely with what we want to see from a directional perspective on Euro AUD, because if AUD gets weak, Euro AUD should make a move to the upside. And what we can see that with the last report, actually what hedge funds did, they closed 2K shorts and opened 1.8K longs. And that is the reason for which the market made this move to the downside. But keep in mind, we are now approaching this support from a weekly plus double bottom on the daily, and we have the possibility to melt to the monthly support for the last test and grab the liquidity. So it makes sense that basically they are longing AUD for this last move to the downside before starting to short it and basically buying the euro. Because what we can see, net positions, if we look at the longer term, what is actually going on? If you look at the net positions from a longer term perspective, you can see that yes, it's true. Net positions decreased if you look from a increased if you look at minus 54K going all the way down at minus 33K. But look at recently what is going on from minus 25K to minus 33K. So actually it's already starting to getting weaker. Now, if we go and see what is the situation from a euro perspective, what we can see that the net positions went from minus 114K net positions to plus 76K net positions. So a clear increase in the positioning from a long perspective rather than a short perspective. In fact, we have now a 31.3% long exposure and a 17.2% short exposure in the market from an institutional perspective on the euro, which means that we can expect some bullishness if obviously we get proper confirmations. So how we can be wrapping up all this from an execution perspective, how we have to be looking at the market knowing all this data? Well, it's very simple. What we have to do is, as usual, being reactive in the market and not predictive. We can't predict the market, but we can know where we will be entering, basically where we will be looking for possible opportunities and where we can position ourselves with the best probabilities and best risk to reward. And let's basically identify these levels. We know that here we have resistance. So until the market remains below this resistance, we won't be entering the market unless we go and see the market melt to the monthly support. In that case, what we will be doing with students. We will be monitoring price action from a 4-hour perspective, waiting for the market to shift from a bearish market to a bullish market. And if we will clearly see that the market is shifting from a bearish market to a bullish market and provide to us one of our valid entries, then we will be taking a nice long with a very good risk to reward and very good probabilities for a shift away from the area. On the other side, if we will see the market from here break back above this structure, then what we will be doing with students, waiting for a retest, and inside of this area, we will be monitoring price action from a 4-hour perspective, waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries, then we will be taking this nice long with a very good risk to reward and very good probabilities for a nice move to the upside. So as usual, being reactive and not predictive. Now, which are our valid entries that I can show as part of the mentorship program, but a clear starting point is seeing a clear shift from a bearish market to a bullish market. If when the market will reach this area, the market will just continue to push down, obviously we won't be looking for longs. But if we will see the market clearly shifting back to higher highs and higher lows from a 4-hour perspective, then we will start to look for one of our valid entries. So this is the situation on Euro AUD, pretty straightforward. We just have to wait for one of these two scenarios to play out, and then we can start looking at price action from a reactive perspective. That is the power of having a clear rule-based strategy. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you exactly how to apply these strategies with entry, stop, and take profit, as well as answering every question that you have each and every day. So I suggest you go and check it out, or go check out the next video.